Awesome.
Excellent. So I will just go over what we will talk about tonight. And we will be talking, number one is the benefit of renting versus owning. So we'll just kind of go over the pros and cons. And number two is and this is going to be Skylar's part, the real estate myth. We'll go over the programs for the first-time home buyers, the process from the purchase for the purchase, and all the we'll go over all the things that are very important and that help you to navigate when you're buying a house. Market statistics. So there's many changes last couple of years. So we'll touch on that. And we'll try to answer the question, which we all being asked on day-to-day basis. And it's, is it a good time to get into the market now?
So what we really want to think about, when you're getting into first-time home buying is three big goals and objectives that we like to talk about. So one, what options do you have? Is there different kinds of mortgages you can get into? Is there different down payment amounts you can think about? Things like that. Does it make sense for you right now financially? It's something that I think the guys would agree with. If you can afford to buy, it's always a good time to buy. It makes sense equity wise. And then the last thing is it a good time to get into the market, which we'll talk about a little bit more as we talk about market trends, changes, and things like that too.
Yeah, so let's start with the benefits and the negatives of buying versus owning versus renting. So when you own, I think that there's the biggest one is that and especially we've seen that the market's been going up last 10 years. So building the equity is one of the big ones, because once you start paying your own mortgage off and you haul the property for a certain time frame, the equities start to increase, and then you can leverage it to buy more real estate or use it for anything else. Or if you decide to sell and upgrade, now you have that chunk of money that you can use for your next purchase, which we've seen that, now that for first-time home buyers, it's very difficult without that build up equity to get into the market and to buy any like a single detached home, right? So that's definitely the biggest one I can think of. And you can the other really big benefit, which I personally did many times with different properties, is to renovate, increase the value that you can further leverage to buy more real estate, right? Potential rental income, that, again, if you have someone else paying for your mortgage and you have your own, now you're multiplying, you're building up your real estate portfolio. The nicest thing about real estate is you putting 5 or 20% down, but if you're buying a $500,000 place, you're not, and then it goes up 10%, you're not making that money on your small down payment, you're making it on the whole amount. You can't really find that anywhere else. Some of the negatives for owning is, like after, especially now, we've seen that the cost of a mortgage could change over years, right? So if you lock in or if you have variable interest rates, that could change. If it depends on the way you set up your mortgage, and Darcy's going to be talking about it a little more. There's a maintenance cost, and there could be potentially high cost for buying and selling. So real estate is a great investment, but definitely not a short-term one. You want to look on a long-term because of the cost, the real estate fee, lawyer fee, mortgage fee, penalties, it all adds up, and it's very expensive to buy and sell in a short time frame. When you look at renting, I would say that the biggest benefits, you really have a freedom. You don't have to worry about, selling and taking care of anything. You can kind of give your notice if you're on months to months and move on and move for another job or whatever you want. The rent is pretty regulated, so technically you shouldn't have any increase higher than what is set by the government. But it comes with the negatives, which you're losing all this equity you can build up. So a lot of people that got ahead and then were able to save up some money was through real estate by building the equity. You can get kicked out. We've seen it many times, especially now in the fast moving market, that sellers or the owners decided, hey, it's a good time to sell. You get 2 months notice if you're on months to month, and you got to find a new place, right? And usually that with the rental market being what it is, you will pay more money, right? And it's never your own, so you can't improve it. You're not going to be able to build up the equity through improvements. So those are kind of the negatives. We just wanted to cover that so everyone is clear on understanding the benefits and the downsides of each one of those categories. And this is the rental market. So you can see, I don't know, Scott, if you can zoom in a little bit, but you can see that
No.
you're looking at 1 bedroom plus den is about, on average, probably around $2,000. If it's a 2 bedroom, 2 bathroom, you're looking 24 to 28 and plus, right? So sometimes we're seeing that the new construction is being rented for around $3,000 for 2 bedroom, 2 bathrooms. And that is a lot of money that you're paying somebody else, right? And that's been consistent that the every year is going up, and it's more and more expensive, especially during summer in the Okanagan. And the prices for rentals are outrageous.
So, talking about getting into your first home, I'm sure there's some real estate myths that everybody's kind of heard of, or, kind of nightmare stories, if you will, one thing or the other about it. We're just hoping to kind of dispel some of those and give some peace to them. So, first one is you don't need to be pre-approved before finding your perfect home. That can have some truth to it, but being pre-approved gives you the advantage over other buyers. It saves you a headache and heartbreak. Say we're out there and we're looking at homes for you and you're like, I think with my annual income and I think where I'm at with my, maybe debts or anything like that, I think I can afford a home around 800,000. We start looking at those and you fall in love with a place. I would hate to be the one to have to sit with you and say, hey, after talking with Darcy or your mortgage specialist, that's not the direction we can go. We're maybe in a 500,000. So it's always important to be pre-approved so you have a good idea of what we're looking at. And that's the number one thing definitely at the beginning as well. So you can save money by purchasing a property on your own. Again, while you may save some money, not paying commission on a buying agent side, real estate contracts are very complicated. There's a reason that we spend a lot of time doing school and a lot of time doing training consistently to keep up with all these policies and procedures that get put forward from the government corporations and the regulations that need to be in there. You could get into a contract and the other person, the selling client, the selling agent there, he's going to look out for the best interest in their client, and he or her is going to make sure that they get the best price, they get great terms, they get enforceable contracts. And if you try to draft them yourself and you're really new to this, between two people with no agents, you might end up with an unenforceable contract. They might not want to do it at the end, and you can't enforce it in a court of law. And now you've sold your place, you have nowhere to live. What are you going to do? So these are important things to make sure that we're involved for contracts specifically, because those are legally binding. That can get you taken to court, right? You can skip a home inspection. A home inspection, I would never recommend. I don't know, Michael, would you ever recommend someone skips a home inspection?
No, definitely not
Never.
recommend. But we've seen in the last couple of years that people are kind of not forced, but they just wanted to have a better chance and make their offers stronger. And I guess there was more buyers. We had a seller's market where buyers were willing to take more risk because they wanted to get into the market, right? And
Exactly.
you kind of seen it as well, where there was just multiple offer situation, and buyers were so frustrated because they kept losing out on, you would have,
Mhm.
there was a new property that got listed. There was a few days for everyone to get through. At the end, there was 10, 15 offers and one winner, essentially, right? And then those 14 buyers that made an offer would move on to the next one that got listed and did the same thing,
And
right?
on and on
So
and on. Yeah.
yes, so
Yeah.
so we've seen it that was happening last couple of years for sure.
Yeah, and in the crazy market in the last couple of years, we could totally see that people were trying to do subject-free offers, and of course, a home inspection is a subject, and I think now in the market slowing down and where we're at, you definitely want to book a home inspection. It's going to show you things that you're not going to notice in your first look through. Piping, wiring, those kind of things that are behind the wall that you really need to get inspected, because those can be make or break inspections. And if you don't have that in and you move in, subject's clear and everything's done, and you find out there's black mold in the roof because you didn't get a home inspection, unfortunately, that's not you're not going to have much ground there for yourself. So it's really important to have that done and make sure that a professional gets it finished for you. Another thing that can really help you out, of course, is the first time homebuyers program. No, so I'll talk a little bit about the provincial one. I think Darcy's going to touch on provincial and federal a little bit later on, but I'll just give you a brief overlay. So the BC first-time home buyer, you can look at avoiding some things, specifically property transfer tax is a big one. You got to be a Canadian resident, which means you have to live in BC, or sorry, a Canadian resident that lives in BC for at least a year immediately before the date you register the property, and filed at least 2 income tax returns as a BC resident in the last 6 years. Property restrictions to qualify for the full grant must be a principal residency, needs to be fair market value under 500,000 and 1.24 acres or smaller. And what I mean by fair market value under 500,000 is that you can't go buy dad's home that's valued at $2 million for 300,000 because it wants to stay in the family. If you're going to do that as your first time home buyer, it has to be fair market value, which means what someone on the market would pay for it if it was listed. So you really got to be aware of that as well. So you're not buying a family home and hoping that you're getting the home buyer's protection. The other thing you can have with it, with the provincial one, is partial exemption. So this provides a little bit of exemption that gives you some help if it's the fair market value under 525,000 and then larger than 1.24 acres. Now the spacing one with the market the way it is right now, the lot size, you're probably not going to see that come into play too much unless you get just an acreage yourself or you get something small on a lot, but you never know. So it's always important to know this stuff.
The process of purchase. So this one, very important to understand how it all works because it's overwhelming. You don't really like, if you're, especially when you're a first time home buyer, you don't really know where to start. And we have a really step-by-step system that's been proven and we've used many, many times. And it's essentially help you to understand what all the cost that is associated with the purchase, where to start. And, and Darcy's going to touch on it as well. How important it is to get a pre-approval. So you, for many reasons, it gives you access to all the homes that are listed on the market, especially during COVID. We've seen that the sellers would not allow anyone unless they would be pre-approved for the specific amount. They even required us to have letters from the mortgage brokers. So really it was, if you want to get access to all the listings, very important that you start with the pre-approval. And also it really helps you to get an idea what your payments will be, what you're going to be comfortable with, and how much of a house and how much you want to spend and what kind of house you can afford at the end of the day. So very, very important. Some people are like, well, I just want to see this house. Sometimes they can fall in love with it and, they're really heartbroken when they find out they can't get it, right? So it's you avoid all of this and you really are able to just be clear on what is going to work for you, right? Instead of making emotional decisions that might turn out into that, oh, now I am in this place that I really love, but I can't afford anything else, right? So that I think is the budgeting and all of this is very important. Darcy does always a great job. So number two, making an offer. And I think this is the biggest part where most especially first time home buyers will struggle because they feel like that's the big decision, right? Making an offer. And in fact, it's not really, it's just to secure the house, to determine and make sure that it's going to be a good purchase for you. It's going to be a good option, right? So making an offer is basically securing the property for usually about 2 weeks. So you can do your due diligence to make sure it's a good fit for you, right? So as Skylar touched on the subject, so you have the offer, but it has subject to inspection, to financing. So not just that you've been pre-approved, but the bank also want to make sure that the house you're buying is worth the amount of money that you're paying for it, right? So they'll send an appraisal. So we have to do all this due diligence to make sure that you get the financing for the house. There is no major issues with the foundation, all of this stuff, or attic and mold. We've seen it all. So that's why you're getting the inspection. Also insurance, right? It could be a hassle during a summer if there is a fire in the area. It's impossible. So we put in the contract clauses that will extend it so you can still buy the property. And we just have to hope that, the fires will not be not be around anymore at that time. So all of those are big major pieces when you're making the offer. Completion and possession, that's the exciting part, obviously, or removing the subject. Sorry, I went from 4 to 3. Removing the subject. So that is when you've done your due diligence, you've confirmed everything, and that's the big moment where you're removing all the conditions, and that's when you're buying it. There's no point of return after you remove the conditions. So one sheet of paper, we send it in and everything is done, right, and goes to a lawyers, and then there's a completion and possession. That's the exciting part. As I said, that's when you get the keys and you can start moving in. That usually the whole process, looking for a place, you might spend 2-3 weeks, sometimes longer, if there was a limited amount of inventory. So we've seen that it took a little longer last couple of years, but now there's plenty of inventory, some good properties out there, not as many buyers, so it makes it good for you to negotiate some prices. And so that takes about 2 weeks for the making the offer and all the subjects, and probably 2-3 weeks in the minimum, depending if you have tenants, vacant property, or seller occupied, for the lawyers to do all the paperwork and get everything ready.
So it could be as fast as a couple months, eh? Like if everything's kind of in a row and people find what they like, right?
Yeah.
Oh, went a little too far. Okay, so really quick touch on some market statistics here. Really what I have this chart in here for is to give you guys an idea of, when the markets crashed the last two times, and they did back in the late 90s and around the 2008 2010 area, is when the last big market crashes were. And an important thing to know is, even though the markets crashed in their time, over time you can see the line going up. You can see that the markets go back, they bounce back. And what you really want to think about, and especially as a first time home buyer, is real estate is not a quick investment. It's a long-term investment. You want to be thinking 5-10 years down the line with the properties that you buy. If you're thinking about, I want to flip it next year, then that's a little risky. You're really vulnerable to the market and which direction it goes. And that's why people that flip houses, they pay really close attention to this stuff, and they try to make sure that it's a good year to buy and hopefully things keep climbing. Now, the last couple of years, like Michael said, were pretty crazy, with COVID and everything. House prices skyrocketed. Everybody thought there was going to be a huge collapse. Some financial advisors were telling people, don't buy houses, don't make big purchases. And then house prices doubled. They went from an average of about 500,000-600,000, all the way up to over 1 million here, which is quite drastic. And if you did make that investment before COVID, you're laughing right now. You're in a really good place. But again, even if you made that investment 5-10 years ago, you're in a huge place. And even if you made that investment a year ago, sure, you might be down a little bit now, but you got to think about the 5-10 year span. People always need homes. Housing crisis is still in effect in Canada, right? We need, what was it, like 5.8 billion homes in the next 5 years or something like that. It's substantial, right?
Yeah.
And and we're estimated to have like 2.3 billion. So housing is always going to be in demand. It's always going to be something that's a good investment long term for you guys.
And this one's really good. This will really help you to understand what's been happening, right? So with COVID and everything, we saw it was a major seller market, where we saw it was basically 80-90% of anything that was listed. It was single detached home, apartment, townhouse. 80-90% of anything that was listed was selling, right? So it came for sale, and basically 9 out of 10 properties would sell. Now the balance market is anywhere between 40-60%, which we've seen throughout the summer, and now we are kind of on the verge of being between the balance market and buyer's market, which means that it's 40% or less of the properties selling. So now when we list 10 properties, 4 of them will sell. So it's much easier to get into the market. You're not competing with 10, 15 other buyers. There's much more. We have about 8 months of inventory. During the COVID and the sellers market, we had just over 1 month, right? So that means how long would it take from if there would be no new listings for all the properties to sell, right? So very interesting. And I think that biggest piece here, which always fascinates me the most, is that when we didn't have any inventory and prices were really high, everyone wanted to buy. And now when it's much easier and we're kind of on the downward on the craziness and the what prices we're doing, like everyone wants to wait. Like it's always the opposite, right? And I think that we don't know when the bottom's going to be, but if you look at it, it's just much easier to get in. And if it still makes, for me, it's always makes sense for me to rather pay your own mortgage than paying rent. That's just my thought process behind it. But this kind of explains you the type of markets and why we thought it's a good idea to do this webinar, is because we're heading into 2023. Probably our kind of gut feeling is that it's going to be more of a buyer's market.
Yeah, exactly. So here, I'll let Darcy take over here. He's been sitting very patiently and he's got some important stuff to share with us as well. So Darcy, if you want, feel free to take over the screen share there, my friend. And
fair enough. Okay. Okay. Yeah, I think you need to.
There we go.
Oh, there we go. Perfect. Okay, you guys can see that okay?
Beautiful.
Okay, perfect. So I put a little slideshow together. I'll try to stay on script as best I can, but when we work together, just know I tend to be long-winded. I'm gonna cut myself short today because I value you guys' time, and I know you probably have questions and stuff, and we'll get to like a Q&A section at the end. So just hold tight, sit back, and hopefully I'll provide some value here for you. So quickly, buying your first home is obviously a major decision, but it's something you definitely do as soon as you can. I'm just going to throw it out there. As soon as you can, you should. But we're going to get to that reason further on down. Okay. So the first thing you might be asking yourself is, how the bleep can I actually afford to buy my home? You look out there, you're like, oh man, single family home's $1 million or whatever it might be. I'll never be able to afford it. Well, my personal thought is you probably can right now and you don't even know it. Now, could you qualify for the $1 million house? Maybe not. Okay. But most people who have $1 million house, that's not where they start. They usually start smaller, whether they get that condo or the affordable townhouse, and they let time build equity. Mortgages get reduced, they take that equity, and now they can transfer it into the $1 million home down the road or whatever. So so that's kind of the first point, is you probably can qualify for something. Okay. Then the other question is, if you could qualify and you can actually afford it, okay, everything comes down to, do you physically have enough cash in your pocket to make the payments, right? Should you? Okay. And again, I think you should. But we're going to get to that answer towards the end. So this is me. I'm a family guy. That's me, my daughter Peyton. That's her 1-year birthday that happened this summer. Here's my partner Catherine. I've been in the Okanagan since 2000. I was also here in the 90s for a little bit. I traveled around a bit, but ever since the year 2000, I've been back, and I lived up and down the valley. I love it here. Raising a family here now. But before I became a mortgage broker, I actually used to work for the government. Okay, everyone's favorite government agency, the big bad CRA. Okay, my job with them was to collect taxes, and needless to say, I wasn't very popular at parties if my career came up. but fast forward, I made the switch to brokering. One, because I did not like the job I used to do. My job was to forcibly take from people, but now I get to give money away, which is obviously much more rewarding. So I'm glad I made the change, and I'll never look back. So a little bit about me. So the first thing we want to do is we got to get you in a place where a lender actually looks at you and wants to actually lend to you. Okay. They're going to use 5 kind of criteria, and I'll quickly go through them to determine if you're a good fit to lend money to, and of course, how much they will actually lend, if they will lend. Okay. So the first thing that they look at is character. This is somewhat subjective. Okay. Basically, it's just the impression you make on them. Okay. What's your your work history, like your educational background, these kind of things. Okay, how long have you lived where you've lived? Okay, so that's, like I say, it's subjective. Okay, some of these details matter. Some matter more, some matter less, but that's one of the factors I'll use. The next thing is capital. Okay, basically, this represents the down payment for the property that you want to buy. Okay, so in Canada here, the minimum down payment, depending on purchase price, is as low as 5%. Okay, so you could buy a $500,000 property. 5% of a $500,000 is 25 grand. 25 grand could actually get you to control $500,000 asset. Okay, so that's pretty incredible leverage. Okay, try to buy a stock for a 20 times leverage factor, you won't find it. Okay, but in real estate you can. Beautiful thing. Capacity. This one here is basically, it's the math behind how much you qualify for. Okay, how much, do you have enough income to support the mortgage payment, the property taxes, any other debt obligations you have, like car loans or student loans or credit cards. We factor that all in, and we spit out a certain ratio. And if the ratios are in line, lo and behold, you could qualify for X amount of dollars. Okay, I won't get into all the details with that right here because it'll just bore you. But that's the biggest thing. That's regulated by the government. We have to fall within these guidelines, especially if it's something less than 20% down payment. Okay, we have to follow insurer guidelines. So that's a little bit about capacity. The next one is collateral. This one simply is, when everyone thinks you get a mortgage. In reality, you get a loan and you give the bank a mortgage. It's a reversal of technicality here, but when you give a mortgage, that mortgage is backed by collateral. In this case, it's the property you're buying, and we have to make sure that the property you're buying values, like the loan that goes with that property. There's enough room in there that you're not gonna get a $1 million mortgage on an $800,000 property. It doesn't work that way. Okay, there has to be more value in the property than the loan that goes against it. So that's collateral. And then lastly, of course, credit. Needless to say, the higher the credit score you have, the better rates you're going to get. The lower credit score means that your rates are likely going to be higher. And depending on, how big of a down payment and so on that you have, too low of a credit score might prevent you from buying altogether. But, if you want to have a quick idea of what your credit looks like, simply, go to Borrowwell. There's an app, Borrowwell, and that will give you your retail Equifax score. And you could get Credit Karma, which will give you your TransUnion score. And that's a fairly good gauge. Obviously, the credit that I pull when I'm running an application is quite a bit more involved. It's more robust. It gives more analytics. But if you do these things with Borrowell or Credit Karma, and you get a kind of an idea, essentially, if your credit score is at least 650 or better, chances are you're going to qualify for the best rates. Okay. So there we go. That's something just to think about. Lenders will use all of these things. They might weight more on capacity than credit and so on. Every lender has their own policies and how they choose to underwrite a file or whatever. But just keep that in the back of your mind. This section here, I want to just talk about some mistakes that I see first-time homebuyers make, and just want to plant the seeds so you can maybe try to avoid them. Okay, so the very first mistake, this is the biggest one by far, is not being properly pre-approved. Okay, and I can't stress this enough. People, you'll go onto your bank app and say, oh, how big of a mortgage can I qualify for? You 30 seconds later, you punch in some numbers and wow, $800,000. Okay. In reality, that is not worth anything. Okay. Without actually seeing the documents that go into the full mortgage application process, we don't know. You couldn't take that, you would never want to say, oh yeah, I'll use that computer printout and go and write an offer for $800,000. And then, you go to actually get the loan and they ask you for documentation. And all of a sudden Skylar, you mentioned this, maybe you only qualify for 500,000. So the biggest thing is you got to get pre-approved. It's going to require documents, and the faster you get those documents in, the better we can actually tell you what you can qualify for. Okay. Not future-proofing your buying decision. Okay. This one, you may not really understand what I'm talking about here, but I'll put it like this. Let's say that, you're a single person and you're in a new relationship, but, you're not ready to move in yet, whatever. Okay. Yeah. I'm going to go out and I'm going to buy that one-bedroom condo. But let's say that, in the back of your mind, you're like, nope, this person, I'm going to marry them and we're going to start a family. We're going to do that in a couple of years. Okay. I would suggest that conversation needs to happen with me. It needs to happen with Michael or Skylar, because if you wanted to start a family in the relative short term, maybe that one-bedroom condo isn't the right purchase yet. Because maybe you'll have to upgrade in 2 years to the 3-bedroom that has room for kids in a home office or whatever it might be. So just understand that the mortgage product that we put you in really, there's a lot of factors behind the scenes of what product is the best fit for you, and sometimes it might be the 5-year product. Okay. But if you might make a move in the next 2 or 3 years, I wouldn't want to put you in a 5-year product. I'd put you in a 2 or 3-year product, just so you can avoid penalties and so on. So that's what I mean by that one. So yeah, definitely a conversation we need to have.
And Darcy, just to clarify, so when you're kind of thinking about future-proofing the decision, I think you would be, you'd be asking people to think, what are your plans for family life and growth personally in the next 5 years or so? Is that kind of the ballpark space?
Yeah. It doesn't have to be 10 years down the road, but definitely within the next 5 years.
Right.
What are you thinking? Are you thinking that you might want to go back to college in 2 years or whatever it might be? I mean, lots of different things, but
totally.
If something like that were to happen, you'd want to make sure that you wouldn't have to be forced to sell your property, that if you're in a condo building, they allow rentals, right? So things like all of these kind of various things kind of really play in to the kind of mortgage we'd place you in. Okay. And obviously the kind of property you would actually want to buy as well. So That's why, we'll tag team for sure with the buyer on what they want. Okay. Dream team. Real estate's a team sport. Okay, so you need the financing. That's the position I play. Michael and Skylar, they start and they help with the contracts and writing offers and getting them accepted and viewing properties. But there's other pieces to this puzzle, and there's lawyers, there's insurance providers, there's home inspectors, there's appraisers, there's uh, uh, financial advisors. There's a whole host of different things here. So if you don't have some of these pieces in place, don't worry. We're more than happy to give some referrals out and get you in the right track there with people that we think would be a good fit for you. Okay, but just know that it's not just something that you do in a day and it's done. There's many moving parts and there's lots of different people involved. Okay. Not understanding the small print in a mortgage. This is big. Okay. Mortgages, if you know anything, banks are not, how shall we say, we may not always like bank policies and blah, 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 but they're not stupid. Okay. They put clauses in to maximize their profitability and so on. So certain mortgages, you might see like a super low rate out there. But what you may not know is that rate might have a whole bunch of fine print attached to it that, restricts you from even selling the property or breaking the term of the mortgage, like, breaking the mortgage. You may not even be allowed to transfer out to a different product, within the time of your term. So there's lots of different things in there, but after we've talked and we've gone through discovery and we understand your scenario, I will show you some of the products out there, and I'll tell you why this product might be better than that product. Okay, so definitely lean on me for this one. I will go through it with you. Okay, first-time home buyer programs and incentives. Okay, so Skylar touched on the big one in BC, which is the property transfer tax exemption for first-time home buyers, provided that you fit the guidelines. Okay, it's going to be under 525. The land, the square footage of the land, and obviously that you haven't owned property anywhere in the world prior. Okay. But there's other ones. There's the government has the first time home buyer incentive. This is the federal government, and it's a matching down payment program. Okay, so essentially, if you put 5% down, they might match with 5%, which means you have 10%. Well, in theory, now you're only financing 90% of the property instead of 95, which means you have a smaller loan, less interest, or you save money. Okay, so there's that one. There's the federal government will allow you to use RSPs, okay, up to $35,000 per applicant, tax free. Okay, so you can withdraw your RSPs tax free to help with down payment or whatever it might be. Okay, and then of course when you file your taxes for the year that you actually purchase in, generally speaking, the last number of years there's been the home buyers tax credit. Okay, it's $750 tax credit. So unfortunately BC, unlike some other provinces that might have municipal grants and rebates and so on, BC doesn't really have that, but definitely these programs here are great if you qualify. But I'll run the numbers and I'll let you know if and how you may qualify for them, and you can tell me if you want to take advantage of them. Not understanding monthly budget and closing costs. Okay, so this is a big one. Okay, everyone knows renting is quote unquote easy. Okay, $2,000 a month, plus utilities or whatever. You just have to make sure that that rent's paid on time, whatever. Okay. You don't destroy the property, blah, blah, blah. Easy peasy. Mortgage is a little different. Okay. Obviously, you need money for the down payment. Okay. And obviously, that's substantially larger than, the 1 month deposit or a half month deposit to rent. But there's other things like, if you buy a condo, there's going to be strata fees, there's going to be property taxes. You really should budget an amount for maintenance or whatever, that might come up. The actual transaction itself will have legal costs. There'll be, potentially appraisal costs, home inspection costs. So I work through all of these things. Okay. So you'll know specifically how much this property, should cost you, how much cash you actually need to close with. Newsflash, it's going to be more than just the 5% down payment or 10% or whatever your down payment minimum is. It's going to be that plus some. Okay. So I'll cover that for sure when we work together. Okay. The difference between what I do and going directly to your bank. Okay. There's a lot of benefits working with a broker. The banks have their place, and they've had their place for a long time. What I can tell you, and I'm biased because I'm a broker, but even a banker could tell you the same thing. Number one is when you deal with the bank is looking after the bank's own interest. Okay. They're not putting your needs first, they're putting their own needs first. Okay. So with me, I don't do that. I work for you. Okay. Not the bank. So I put your needs before the bank's needs. Okay. And that's why I have access to many lenders and so on. So I can find the best product for you. Number two is I'm not a call center. Okay. When you have a question, you dial me. You have my cell number. Okay. If I don't answer immediately because I'm on another call or whatever it might be, I get right back to you. You deal with the bank. Sometimes you're not always dealing with the same person. They don't intimately know you, your file, or whatever. They're just a number on a computer screen. With me, I have a relationship with all my clients. Okay. So you get me. I don't, as much as I try to fit within, quote unquote banker hours, really I can accommodate whatever time is necessary, to answer a question or get the job done, whether it's, 10 o'clock at night or whatever. I mean, I can accommodate. So that's some of the perks with working with me. One of the other things that a really good mortgage broker will do is they're always in the background. They're always looking out to try to save you money. Okay. So, let's say, you're in and, a year and a half from now, rates drop dramatically. Okay. Which newsflash, personally, I think they are, but I don't have a crystal ball, so don't hold me to anything. But let's assume rates drop dramatically in the next year and a half. I'm going to reach out to you and I'm going to show you whether or not, you'll be able to save, $300 a month or, 2 years off your mortgage or whatever it might be. Okay. I'm doing that for you. When you work with the bank, chances are they're not going to contact you until right before the end of your mortgage term. And it's time to renew. Okay. They're in the business of making profit. So why would they want to call you to break your mortgage to offer you something that makes them less money? Okay. So that's just a few things of why working with a broker is much better personally. But sometimes the bank is still the best place to go. And I'm the first one to admit that. There we go. This is the last one I'm going to quickly do. I know I'm being long-winded here. So your other obligations, whether it's needing a car loan or whatever, okay? They have a very material effect on how much you qualify for. Not just right now before you even apply for a mortgage. Um, it definitely has a huge impact if you ever did it between the time that you have an accepted offer until the time you get your keys, okay, to the property. But it also matters right before maybe the end of your term when you want to renew into a better product, in 3 years or 5 years. Okay. If you do these kind of purchases, you always want to contact me first so I can tell you what that effect of that purchase would have on you qualifying for the next mortgage or whatever it might be. Okay. So, back to this question: if I can qualify and I can actually afford to buy now, should I? Um, we saw some stats. This is a smaller time frame snapshot. It's only like the last 7 years, but we can see where a house price was under $500,000 at the beginning of 2016. Um, it peaked this spring to like 1.15. Now it's fallen back a bit, okay, to just 950 grand, give or take. But you can see the trend line over time is it goes up, it goes up, it goes down, it goes flat, it goes up, it goes down, it flats, and then we get in that big spike where it can really spike up, and then it has more of a dramatic downturn. But if you look at that time frame over since 87, the graph that uh, Skylar had put up there, the average, that's over 34, 35 years, something like that. Um, you know, 87,000 in 1987 to 1 million or whatever it was last year. Okay, graph goes like this, but the average rate, year over year over year, is a 7.5% increase. Okay, obviously some years might be 20% and some years might be minus 9%, but consistently 7.5% for the last 3.5 decades. Okay. I want to show you something. I'm going to quickly show you a spreadsheet here of, renting versus owning. Okay. If you were to, let's say you had to find a place to rent and you're going to move in January 1st. Okay. Roughly, depending on the area of town that you want to buy in, each bedroom is roughly $1,000 a month in rent. Okay. So, I'm going to use a 2-bedroom example here. So let's say you start out and you're renting for $2,000. Okay. If you could buy that same place for $350, okay, even at today's rates of 5%, which are quite a bit higher than they normally are. The last few years, they've been, as low as under 1% on a variable, but let's say 2 to 3.5% is kind of the average over the last decade. So rates are higher right now. Your monthly mortgage payment is slightly more than the rent you would pay. Okay, but chances are this is a condo. Condo's going to have strata payments, and let's just say that it's $250 a month. Maybe it's $1,500 a year in property taxes. So we're going to average or budget $125 a month for property taxes. So we can see that that property would probably cost you around $2,400 to get into. So right from day one, you're thinking, oh man, like I'm short $400 a month. It's more expensive to own than buy. But the power of owning isn't in that first month, that first year. It's in the 5 and 10 year mark. Okay. So yeah, that first time, you have a little bit of equity, okay, because part of this mortgage payment, you're paying the loan off. Okay, you're paying part of this $350,000 loan off. Your net worth in this case, after the first month, $182. This is month by month, but all of these are broken down. I can expand them all for each month. But what I'm going to do is I'm just going to summarize the annual amounts here so you can kind of see. Yeah, owning might cost you an extra $5,000 that first year, okay, in cash. But your net worth, even factoring in the extra cash you had to put in, you're ahead of the game, $8,700. That's year one, okay? 14,000 year two. And this is assuming 2% increase in real estate value, okay? That's what it's assuming. So yeah, in 10 years, if you were just to sell everything and you're going to be a renter, okay, and let's assume, I'm not going to assume any selling costs here, but you're $100,000 ahead of the game over renting, and that's just in 10 years at a small 2% increase, okay. It's huge. It's huge. Some of the years you see, if we did the 7.5%, which is what the average has been over 35 years, this number is going to shoot up dramatically. Okay. Just wait for this to load. Hurry, hurry, hurry.
Darcy, I can, share a story. I had a friend that after the 2008, he had this very negative mindset. He was like, oh, it's not the end of the, real estate correction. And he was just had this belief that it's going to go further down. So he was renting, even though he was paying very low, like $600 a month or $700 a month, really low rent for a small apartment. He was like, I'm saving, I'm getting ahead. And he ended up buying in 2020. And if he would have bought right after to that, like 2009 or 10, right? He could have bought for 500. He just ended up buying a house for $1 million, right?
Exactly.
Like he actually, because he was waiting for this correction, and then it cost him. I was like, man, you just bought at the right, because he was seeing that basically he's losing on the equity, and the properties are getting more and more expensive. He thought it's going to go the other way, and that never happened, right? So I mean, we don't really know, we don't have a crystal ball, but this story would. And in the meantime, I bought a property in 2009. That was my first place, and it doubled in equity, right? I did some renovation, invested some money, and I was able to double in equity. So I was getting ahead. He lost out on that opportunity, and he was never able to. You're just not able to save enough money to make up for the equity, especially when you look at the last 10 years and what the real estate market was doing.
Exactly. I mean, that's the thing. I mean, the cost of living goes up each and every year, right? Inflation happens. Obviously, right now we're experiencing the highest inflation we've had in, 40 years, give or take. But wages don't generally go up faster than inflation does. So you can never really, it's really hard to say. I mean, yeah, if you still live at home or you've lived in a place for a long time where your rent's been controlled and it hasn't really gone up, yeah, maybe you can save, $500, $1,000 a month, whatever it might be, but you don't have the leverage. Okay.
Yes.
Yeah.
Real estate, each payment you make is putting 400, 500, $1,000 a month against that loan. Okay. And then,
I think that people are not disciplined, right? If you just like, you're not like, they're not able to put it aside. They'll spend it on things and different distractions instead of putting it aside for, the down payment, whatever, right?
Yep.
But yeah, just to stay on time here. I guess you have your new numbers, but I think we got to start moving forward.
Yeah. You betcha.
Yeah,
I just wanted to leave with one last quote here. Okay. So this is just the power of that. But back to this really quick. This is the biggest reason why you need to. Okay. Skylar touched on this, but in the next 8 years, we're short about 3.5 million homes. Okay. We have 500,000 or more immigration policy a year. Okay. 400 to 500,000. All these people are professionals with money. They're going to get good paying jobs. They want housing. They want to buy. We can't build fast enough. Okay. So even though we're in a lull right now, supply and demand says that the limited real estate that's available out there for the amount of buyers that want to buy it will always, chances are will push pricing even higher. Okay, so I'll leave with that, and yeah, I'll throw it back to you guys.
Perfect. Okay. Here, I'll take over screen sharing really quick here and wrap this up. I want to make sure that we get this done here. So if there's any questions at the end, how does that look for you guys?
Looks good.
Looks good. Okay, perfect. All right, so just really quick, to cap on, after all that, if you're still not convinced why you want to go with us or not, a couple other things for ourselves. So Michael and I work with Royal LePage Kelowna. Royal LePage consistently dominates the market share. We're about 30% around that area of the market share through the area. And to put that in perspective, it's not just there's 3 or 4 brokerages. There's 12, 15 other brokerages that are competing for that space, and we're number one consistently. So the thing with that is, not only do we have the most space, the most recognition, and the biggest name to help maybe with your listing at some point, but also while you're buying, we have things like exclusive listings and pocket listings. So we have a huge web of connections and people. And when people don't want to put their house on the MLS, or even when they do, the agents will tell us a couple days in advance. We have meetings weekly about it. Hey, this house is coming on the market in a couple days. If anyone's interested, this is a really great time. And what that value means for you is that if there's a place that you're looking at and we know about this and we hear, oh, hey, this place is coming on the market in a couple days, guess what we'll do? We'll go right to you and say, hey, do you want to check this out? Hopefully before it gets listed. You can be the first one in the door to check it out. And if you really like it, we'll put an offer. It might not even get listed. Let's just buy it right now. And that's what's really important about being here for us. The other thing is our step-by-step system, of course. So it's something that we have a detailed purchasing system to help you walk through everything as seamlessly as possible. Make sure you have the right professionals in line. Make sure we're booking stuff for you. So again, all you have to do is look at some pictures online, ideally, point at one, say, Skylar, Michael, that's the one that I really like. Let's make it happen, and we can do the rest for you.
Yeah, I think we have slides there. Yeah.
Yeah, really quick thing about the market share is, just like I said, so this was this month, up to this year to date so far. So we've got 29% of the market share, and those are the other brokerages. And then there's a big section of other. So even joined brokerages still don't have the kind of share of us. Obviously, Remax is the closest with us as well. But this is fairly consistent. We're usually anywhere from that 28 to 35%. With us, really quick things as well. Prospects mobile app is something that you can use that we can help communicate what kind of houses you're viewing. It's a really great way to get information on the go. It's a quick app that we can send to you as well. It just downloads, and anything that you want to look at or star or favorite, we can see as well, so we can help follow up with you, along with matrix auto emails that we can do for you as well. This is a quick shot of kind of the specs that we can look forward to. There's a lot of other stuff in there that I couldn't fit, but this is how we help search for homes for you. We set up auto emails and we make sure that it's there, and then we browse those every day as well to make sure that we don't miss anything and that we catch what you're looking at. But that's the whole presentation.
Yeah, and
I hope there's a lot. Yeah.
Yeah, I have a question here from Jennifer, just monitoring
Yes,
the chat here. And it was just regarding the interest rates, and if there's, how long, and I think this is more for Darcy, but I'll try to answer that. But, how long we're to expect the high interest rates? Is it going to go higher? I think that there is a prediction that there's going to be another increase from the Bank of Canada. And gas, the biggest reason for this is to fight the inflation, and it's we're still not there. So I think it's like, when you start taking a medicine or something, you can't stop taking the medicine when you start feeling better. You gotta keep doing right until it's really under control, and you're feeling you're not sick anymore. So I think that's kind of the analogy. So I think that we'll see the interest rates moving into 2023, and we'll see if once the inflation gets under control. I think that's when they will be looking at it to maybe go down again, right? But Darcy, maybe you can add to it or share your opinion.
Well, I mean, obviously none of us have a crystal ball, so we can't lay a hard and fast, take it to the bank kind of thing. But yeah, I mean, from what I hear is there's probably still a little bit more room for the Bank of Canada to increase their rate, which, their overnight rate, their lending rate, and then generally the banks follow. So yeah, I do expect a slight increase still to come. But I think we're getting close to the top. Okay. Usually what happens is when the economy is good, and inflation starts to happen, rates rise, okay? A little bit. But what the Bank of Canada is trying to do to stop inflation is throw us into recession. And if we go into recession, what do the bank have to do? They generally have to drop the cost of borrowing, drop interest rates to spur the economy to move again. Okay. Now, we have to combat the inflation first before that's going to happen. So, yeah, I think rates will go up a little bit more. But I think in the next year, year and a half, I think we'll see rates fall again. But again, I mean, after what's happened this year with rates and Bank Canada and doing what hasn't been done in, you know,
Yeah.
a very, very long time, I've given up giving any more advice than that.
Exactly.
Yeah.
And I just want to make sure. So, Greg or Keith or Jennifer, if you guys had any questions, was there anything that we left untouched or anything? Also, Keith, really nice to see you, man. We'll call you later this week too and chat a little bit more. But did you have any questions about the presentation at all?
No, I don't have any questions. You've given me some ideas, though. I'm not a first-time home buyer, but you've given me some ideas.
Yeah. Okay. Awesome. Awesome. That's good to hear. And then I had one question just from somebody that couldn't make it. I was just pulling it up here. Can I offer on more than one property at a time is a question that they had asked. And I think we can all kind of give our 2 cents on that. And I don't think you want to offer on more than one property at a time by any means. You don't want to get tied up and possibly end up getting 2 accepted offers and having 2 homes when you only wanted 1, right?
Yeah, it's definitely a fine line, right? I mean, I understand that, especially when the market was really hot and there's low inventory, people trying to get in, sometimes making backup offers, and that's the downside, right? When you're trying to play this game, could go really badly because you're making offers, or legally binding offers, and you're not just able to walk away from it because you found something you like better, right? That's not the condition we're putting in the contract, because probably no one would have accepted it. So your options are to walk away for the reasons that are in the contract, and technically you're not allowed to go around and just throw a whole bunch of offers and see what sticks, right? And I think that Kelowna, and I was selling real estate in a small market, and if you would start doing that, the word gets around, and then no one's really going to look at you seriously, right?
Yeah.
If you're just kind of making offer and you're not serious about it, it's just not. I don't think it's a good practice.
Agreed. Yeah, and especially with the cool down period coming in next year, and I mean, we can all talk till we're blue in the face about everything. So I think we got to tie this one up. But there's a lot of questions that can be asked, and I've included just all our cell numbers. Again, we're all very personable guys, so we like to use our cell numbers to make sure that you can contact us right away. You're not calling some line that connects to us later. It's always right to us. So those are our cell numbers, our emails as well, and then our Instagram for Kelowna Real Estate Group. But we just want to thank everybody for coming out and taking the time to do this. Keith, Jennifer, Greg, and then anybody else that's watching the recording later. So thank you very much, guys. And thanks, Darcy, for coming out. It was really nice having you and having you on this video as well. So
Well, you're welcome, and yeah, thanks for inviting me, and hopefully I provide a little bit of value. And obviously, I'm always learning too, so listening in on this is always good from that perspective. So thank you.
No, you did, Darcy, and we have Darcy as one of the main guys, and he always does excellent job. And we were talking about the team and everything, and Darcy was essential with helping our buyers to get into negotiate better deals, because we're using his letters and the information, and he does a really excellent job with the pre-approvals or approvals, basically. Yeah. Where we have everything in place, right? So it makes our job much easier, because we're coming to the table with a solid offer that is backed with the approval from Darcy, right? And it's not just the one you pull and print out from the website. Darcy collects all the documents, goes over the numbers, and puts it together, and then he gives us a green light, and we present it with the offer. So when we had a lot of multiple offers, that was you stand out when you have that kind of prepared and you have everything in place, and makes our job easier, and for the buyers is a huge benefit, because usually you can get a better deal or you can win in a multiple offer situation. So definitely appreciate you, Darcy, and Skylar. Thanks for your time today and putting all this together. He's done all this great work with the presentation, and thanks guys for joining us. And if you have any other topics you would like to get more info, just let us know, and we'll put one of these together, and we'll talk about something else.
Awesome.
Thanks, guys.
Cheers, everybody.
Thank you.